Want to talk through a little bit of these earnings numbers, including the GM number that just crossed. We also heard, obviously, from Disney last night. What are we to make of these numbers?
So I think you make three things. One, as Phil said, this is not a throwaway quarter. This is not a look-through quarter. There's a lot of information about both companies and the economy. The focus is on balance sheet. Most of Phil's interpretation was all about balance sheet, liquidity, cash burn, capital raise. So that's the critical focus. Second, you're seeing massive winners and losers, not just physical versus virtual, but within physical and within virtual. And then thirdly, you're not having much visibility. And these three themes, Andrew, not just inform the bottom-up positioning, but also tell us a lot about what's ahead for the economy.
Well, tell us then what's ahead for the economy, because, you know, depending on your outlook, and again, there's a big bet you have to make on testing and how quickly people come back and what demand looks like. But you look at a Disney at these kind of prices and you say, if you believe a year from now that everybody's back at Disney World, these look like great prices. If you don't believe that, it's a much more complicated picture.
So absolutely, the top-down bet, and that's the market is being still driven in terms of overall levels by top-down, but we are seeing massive differentiation within names. It is the high-quality names that I've been talking about that have outperformed significantly, both on the way up and on the way down. But the top-down theme has evolved. It used to be about policy support. Now it is on a positive bet on the reopenings. We have 40 states reopening, and the market has embraced the notion that these reopenings will be healthy in the sense that they will be sustainable. And we're going to learn a lot about the health aspects, but also about the consumer behavior and the business behavior. In terms of what it tells us about the economy, I think three themes are coming out very strongly. The winners in general are low employment intensity. So jobs may not come back as quickly as we all want them to come back. Secondly, productivity is going to be very different. Among the losers, you know what's the word you hear the most? It's no longer resizing, it's right-sizing business, rewiring different supply lines. So we're going to hear a lot about that. And then debt and balance sheets are going to be important. So these are really, it's a really informative earnings seasons.
Right. So, Mohammed, the other question, though, what I'd ask you is, you've been very cautious throughout this pandemic about the markets and which way things are going to go, in part because I think we all don't know what the health implications are going to be and how quickly we're going to get back and whether there's going to be reinfection in the future and whatnot. The question is, clearly the market is looking through a lot of those issues already. And Joe's talked to you about this. I think I've talked to you a little bit about this as well. What are you looking for as the next, I don't want to say shoot a drop, but even next signal is what I'd say, both on the good side and the bad side as we're reopening?
So first,
that would give you the all clear. And by the time
you
get the all clear, will you have missed the all clear? Meanwhile, obviously, there's the negative as well.
So for the last few weeks, whether it's with you, Becky, or Joe, I've been stressing up in quality, up in quality. And up in quality in stocks means strong balance sheet, positive cash flow generation, good management team, and you're on the sunny side of what comes after the crisis. Those are the names that have outperformed. Those are the names that have driven the index, as Mike Santoli said earlier. It really has been a few names driving the index. The question now comes, do you fade these names and go into the others, some of which are 40%, as Mike said, below their all-time highs? And that depends, honestly, on your call on the economy. There are two clear sort of views out there. There is the market view. This is going to be a very smooth recovery. And if it's not, it shouldn't matter because we're going to get the backstop of policies. Then there's the economist and health view out there that this will be a stop-go process. We're going to reopen. We're going to learn a lot. We may actually have to shut down selectively, But the good news is that we're going to learn to live with the virus. We just don't know how long that's going to take. And hopefully, it doesn't need to take that long because we're going to get community immunity through a vaccine. So you have these two distinct views. And you as an investor, if you're going into the names that have continued to underperform, which is where the massive upside is if we get a global recovery, are betting that the health experts and the economists are too cautious. That's the bet you need to make if you want to go all out, lower in quality.